Good evening traders, it's James here from Cohort Wealth, and today's video is going to be a fairly quick one in which I'm going to cover the technical analytical tool that is the Fibonacci Retracement. So we predominantly use the Fibonacci Retracement to help us identify where a pullback of price action will finish. This allows us to use it to help choose the possible entries and exits for a trade. We generally want to use the retracement on the higher time frames, and we actually find we have most success with it using it on the 4-hour time frame. However, it is a tool that does work on all time frames, and you can really integrate it into many different trading styles and systems. The actual Fibonacci retracement tool is very simple to draw on your charts. We just need to identify the highs and the lows of our trending price action that we are wanting to trade. And there are many possibilities when identifying the highs and the lows. It would be definitely considered somewhat of an art form rather than an exact science, particularly as the market is unique and you'll never get the identical price action as compared to when it was in the past. But once we've identified the highs and the lows of the trend we're looking to trade, we can draw the retracement using the real bodies of the candles and not the wicks themselves. So if we're looking at a bullish trend, in this case we're going to be taking this point here to this point here, ignoring the price action on this side, on the right side of this line. We can draw our Fibonacci retracement from the low of the body of the candle, just here, taking the lowest point. And we're going to draw it all the way up to the highest body of the candle, which is just up here. I'm just going to drag this along just to help with the future price action. So we've gone from the low to the high, and that gives us our Fibonacci levels. And if we're looking at a bearish trend, we take the high point, the upper body of the candle, to the low point, the lower body of the candle, not the wicks, don't take it to here, go from the bodies. As you can see, the first thing you should notice is the actual Fibonacci percentage levels themselves, and each one of those holds varying degree of importance, but most traders actually consider the 38.2% Fibonacci level and the 61.8 Fibonacci level to hold the most sway. But as a result of this, it's a fairly self-fulfilling prophecy that as so many traders are trading to these levels, you actually find price very often pulls back and retraces to these levels. In this case, the price action has gone from the low to the high. We see a small pullback to the 23.6, another pullback back to the high, and we see a much larger pullback, consolidation of price, whatever you want to call it. This one retraced back to the 50% level, so exactly halfway between the high and the low. And here we see the trend from the high to the low. We see it pull back right to the 38.2%. We just get the wick just a few pips off that 38.2% before it continues its way back down. So another quick example of this can be seen from one of our latest reports that we sent out to all Cohort Wealth members, and this is on the euro dollar, where we expected a pullback from the highs of 1.095 approximately, well 1.094, the real bodies. We expected a pullback back into our support zone, and that's something that Ollie covers in our first video we posted. But if we plot the Fibonacci level, the 4-hour Fibonacci, this is on the 4-hour chart, from the real body low to the real body high, I'll just extend it across to see. We had the pullback come right to the 38.2% Fibonacci level, approximately 3 pips I think it was off that level with the wick, 2.6 pips. So it's a really nice doji actually that finished it off. We took the trade from approximately the lower trendline channel, very small stop loss, and I think we entered 2 trades in that, one to the high and then closed and then re-entered on the pullback into the into the upper trend line after it had been broken, and today we rode this nice big 4-hour candle right up to the top. So as you can see, 38.2% Fibonacci level was respected very nicely. Again, this is a sentimental value for traders like the 61.8, but all the Fibonacci levels do hold significance because that's what all the traders are seeing when they're actually plotting this tool. So just to recap, we first want to identify the lows and the highs, or the highs and the lows of our trend.